Hey Armando, this is Ryan with TrendLizard.com. I hope everything is going well. I got the email that you had sent me looking for some analysis on those three tickers, so we're going to dive right in, starting with XME, which is the Spider's metal and mining ETF that we've looked at several times before. So I think it was last time that we had taken a look at this, or maybe a couple times ago, we discussed the bullish nature of XME moving above this yellow resistance area here. And the reason that was so bullish is because it made this entire decline off the 2011 high look like a counter trend three-wave move. So that continues to be the case, even though it's had a little bit of a rough go since the last time I talked to you. There's no doubt that this still looks like a big counter trend move, which suggests that XME is still in a much larger advance that has not yet fully developed. So from a long-term perspective, it still looks really good. Let's go ahead and zoom in and get a little bit more detail on what's going on. This looks a little bit closer at the important level we had looked at. It was 31. We had indicated a move above 31 would be a bullish thing because, again, it would make this entire decline off the 2011 high look like a counter trend three-wave move. So that's basically where it left us moving into this advance that's emerged off the 2016 low. Over that time, it's tripled in value, which has been a really nice move, obviously. Hopefully one that you've benefited greatly from. But it has hit a little bit of a snag, and things are getting a little bit dicey now as we enter 2017. So let's take a look at the near-term advance and see what's going on. So this is the labeling we've been running with for a very long time, since basically we started this analysis of XME. Every aspect of this advance has been really nice and trendy. No doubt about it. Every up leg has been a nice five-wave move, which is what we look for to confirm that it isn't a trend. But it has had a rough go since late February or about mid-February. It's really pulled back quite a bit, and now it's approaching a key level that I had told you to keep an eye on. Initially, I said as a near-term warning, a move below 32 would indicate a near-term high. Clearly, that's been the case. It has morphed into a near-term pullback since then. Now, this is a really important level from here. So if XME moves below 2850, it's going to put a pretty big damper on this entire advance off the 2016 low. To me, it would look like the advance off the 2016 low has ended, and that a larger pullback, likely into this yellow support area, is what is forming now. So hopefully that doesn't happen. A much cleaner outcome would be for XME to find a low soon and resume its uptrend, and a move back above 3350 at any time would indicate that that's the case. But a move below 2850, as we've indicated for a while now, would look bearish and would open the door for a much larger pullback. So if you still own XME at this time after the near-term high was indicated, I would certainly call a move below 2850 a good reason to get out and let the pullback continue without you until the uptrend resumes. So those are the key levels that we're looking at. 2850 to the downside indicates a larger pullback. A move above 3350 instead would keep this up move on track to higher levels right away. So I hope that is helpful to your trading, Armando. I am going to get to the next ticker in just a minute. Thanks.